Most traders think that they are trading fair value gaps the right way, but let me show you how this approach is quietly draining your account. Well, today I will expose the mistakes that I see traders making over and over again, and I will show you how to fix those mistakes before they cost you even more money. Now, if you have followed me for a while, you know that I'm all about fair value gaps, but it took me years to realize how easy it is to misuse those fair value gaps. So what I'm about to show you is the same fix that helped me use the fair value gaps from a losing tool into a powerful strategy. So now we're gonna move on to our first example, and I'm gonna be showing you the first mistake that you are doing. Let's move on to the charts. So this one right here, guys, is going to be our very first example. And I'm not gonna go into replay mode because there is this replay word which is very annoying in the middle of the screen, but I will show you while proceeding like that. We see an up move after we're moving downwards, making lower highs and lower lows, as you can see right here. Then we are changing character, if you want to say it like that. We are changing character right here, and we are making a very strong up move. As the video progresses, I'm gonna be showing you the many different mistakes that you are making and why you cannot trade properly and how to fix them, but this is the very first one. One of the very first mistakes is that you are entering with fear of missing out, or otherwise FOMO, what we call FOMO. So in this occasion right here, when you see the slightest reaction, you think, so if I proceed slowly and carefully, when you see the slightest reaction from a fair value gap that is on a premium zone, and when I talk about a premium zone, if you take your Fibonacci tool and draw it from the bottom of this move until the first retracement, you will see that we are between the 23.6% and the 38.2% Fibonacci levels. This means that anything that is above the 50% level, as you see it right here, is in a premium zone, and you would prefer in this situation to buy from a discounted zone, and the discounted zone is anything that is below the 50% Fibonacci level. Now, for beginners, ideally, I would suggest that you trade on anything that is below the 61.8% level. I will double click on the Fibonacci tool. You can pause the video and copy the settings as I have them exactly right here. Okay, I will now continue with the video. So instead of going ahead and trying to trade all of those fair value gaps that you see right here, where you will be seeing some reactions from most of them. So if I draw all the fair value gaps, you will see some fake reactions above them, maybe not in this occasion. Here you would be seeing a wick. Many traders would be entering in this premium, but now what you know from what I'm teaching you, from this first mistake that you are making, I never want you in those situations to go ahead and trade from a premium if you want to buy. So in this occasion, you would be identifying only the fair value gaps that are below the 61.8% Fibonacci level, and we have two fair value gaps, one right here and one fair value gap right here. If you don't know about fair value gaps, please watch my other videos. I'm explaining everything very clearly. Okay, so if I extend those beauties now to the right, you will see that the proper reaction is going to happen from those. Now, how can you trade those? There are many ways to trade those. The most, let's say, optimal ways to trade are to place a pending order, but instead of going ahead and placing the stop loss all the way down there, which is a pretty large stop loss for many of your likings, then we will be going ahead and we will placing the stop loss for the first fair value gap below candlestick number 2 out of the 3 that created the fair value gap, and this is candlestick number 2. And here, the very same thing, you will be going ahead and you will be placing another order here with a stop loss below this candlestick right here, which is candlestick number 2 out of the 3, namely 1, 2, 3 for this fair value gap and 1, 2, 3 for this other fair value gap. So this is gonna be your trade. Now, you have managed to minimize your stop loss, and you can go safely and target those highs right here, okay? you can go safely and target those highs right there. So in this occasion, I will not be needing the second order that I have right here, so we don't need the second fair value gap. And the first one, as you can see, played out and worked out like an absolute charm. Okay, it worked out like an absolute charm, hitting our target. We are now on the 1 minute time frame, so within 29 minutes we hit more than a 5.4 to 1 actually reward to risk. Okay, now we will be moving to example number 2, guys. And this example, I will be moving forward and forward. Again, I'm gonna be doing it like that. And you can see that we have created a ton of fair value gaps, such as in this occasion or this occasion right here, or this fair value gap right here. And I'm gonna be proceeding with caution because I don't wanna be rushing anything. Now you will tell me, Chris, with the logic that you told us, we should be drawing the Fibonacci tool from the top, and the top is exactly right here, until the first retracement, and we should be entering only on the fair value gaps above the 61.8% Fibonacci level and not on any fair value gaps that are now below the 50% Fibonacci level. Well, dear traders, because trading is nothing simple, you might think that trading is something very simple, you have to have some rules in order to be able to identify if the trend is strong enough and if you can enter in a discounted area on a short or on a premium area for a buy. And this is something, of course, that I'm teaching with my spectacular strategy. You will not worry if you are in a premium or if you are in a discount. Everything is absolutely clear. Of course, it is not your typical strategy, the typical bullshit that they are teaching you and they are charging thousands and thousands of dollars. Instead, you can learn my strategy by going to my website, chrisfxoriginal.com, and clicking on education with live streams that you see right here. This will take you to my WOP, where you can choose the one-on-one mentoring for only $199, and you will learn once and for all, and you don't need any other of the bullshit strategies that you are using. By the way, those are real reviews. You can go ahead and read about those reviews right here. Or otherwise, of course, you can use the cheapest option, which is the signals, for only $49 per month. And if you're gonna make it even cheaper because you don't want to invest in your education a lot, you can go to the best prop firms that I have right here, purchase any account through my links and through my codes. We have the best discounts with the best code, which is ChrisFX on most occasions, despite some occasions where I have another code for the instant funding accounts. The best and the highest success rate code is my code, and if you do that, I will be giving you still access to the signals for free. Okay, let's continue with the video. After you join the signals, it's gonna be extremely simple for you to understand what to do and how to do it. Okay, so now here, because I understand that there is a little bit more to this move, and it's not in retrospect because, again, if you join, I'm gonna be showing you that I had an area down there where we could be buying from, an exact area. So there is a little bit more to this move. A second mistake that you're doing, lovely traders, when you see the first tap on a fair value gap, you are going ahead and you're placing your trade exactly right here. As a result, you are most of the times getting stopped out. You are placing your stop loss above the fair value gap. So instead, what you will be doing, you will be waiting for an additional grab of liquidity, and when you see the candlestick retracing, you will be going ahead and you will be entering instantly on the retracement. This is more of a scalping approach. Those are approaches for all of you guys that you can use with a very tight stop loss, and I want you to target a 1-to-1 reward to risk only for this approach. Okay. Very scalping approach. This one, it can work like a charm though for those of you who are scalpers. Okay, so you avoid the first one and you go ahead, you wait the grab of liquidity, and then you go ahead and take the trade. I know that many of you are not gonna like this approach, and it's not my favorite approach. I'm just sharing everything that I know. Now, a third mistake that many of you are doing just because you do not understand market structure, guys, and you don't understand where price is reversing from, and I'm telling you, that I know exactly where price is retracing from if you don't believe it, and if you find out that I'm lying also in the mentoring, use this video to get your refund please, because I'm absolutely the most true, the most transparent trader out there. Trading a live account, trading prop firm accounts, showing payouts, showing everything. Okay, so let's continue now. A third mistake that you are doing. Now I will take you to the replay mode because it might be better, even though this is a very annoying replay thing in the middle of the screen. Right here, another mistake that many of you are doing. You see now a change in this move or a continuation of the highest, let's say, move, which is bullish from the highest time frames. Many of you are waiting for the fair value gap to be tapped on. What I want you to do in this occasion, you have your first fair value gap, you believe from the higher time frames that now this move is gonna go higher. I want you to go ahead and enter instantly. When the fair value gap gets created, you can enter instantly with a stop loss below this area. And what can you do, lovely traders? If price gets back to the area, you can reposition, what we call scaling in. So now, if there you go, if price goes back in, you can add to the trade, believe it or not, exactly right here, because of your premise of the higher time frame. This doesn't mean that you have to risk more than your overall risk. If you follow this approach where you are entering instantly after the creation of the FVG, you will enter half of the position here in fear, let's say, that this might not come back, which will happen many times. By the way, this can continue higher instantly, and then you will enter the next 50% when price gets back. Or you can even wait for some liquidity to be created, such as in this occasion, and enter below this area. I don't suggest that, of course, as you saw me doing in this, let's say, video. I do not suggest that, but you can even do that, okay? You can even do that. There is no reason, if there is extremely high volatility and a good bias, there's no reason for price to come below the fair value gap. In these situations, you can at least target a 3-to-1 reward to risk, guys. So what are we learning from this lesson right here for the common mistakes that you are doing with fair value gaps? You think that you can use every single fair value gap that you see. And I showed you 3 mistakes, and I showed you actually 3 different ways to trade the one next to each other. So we showed this one where, according to the market conditions, you knew, let's say, in quotation marks, you knew that you wouldn't or you shouldn't be entering here in a premium or from one of those fair value gaps. Instead, you should be trading fair value gaps below the 61.8%. Then I showed you a continuation to the bearishness right here because there was an area that should have been hit right there, okay, which we're not gonna disclose it right here. And then I showed you, because you have a premise from the higher time frames that this now is gonna go up, you can enter instantly at the creation of the fair value gap instead of waiting for price to retrace back in. This, many times you will see that this happens and price leaves without you, and it leaves you frustrated, and you are losing then your patience, and you are entering instantly on setups that you shouldn't be doing that, guys. Okay, so the fair value gap is not only to be traded right on it, let's say, so it's not like you have to always trade the fair value gap like that, but when it gets created, rather, you can go ahead if you believe in the trade and take the trade instantly, okay? That's a very important premise, a very important thing that I want you to take away. Now, again, I have the top strategy. Whoever joins, you can read it on WOP. It is real people with real reviews. It is the best strategy that I have, that I'm teaching. And when people come and learn my strategy, they are never ever using another strategy on the internet. As a matter of fact, as a real trader myself and not a fake trading guru, all I'm telling you is that you need only one-on-one mentoring to learn the strategy, perfect it, and you don't need anything else from me or any other trader out there. Of course, you will be having my support if you book the one-on-one mentoring, you can ask me questions, and anything after the one-on-one, there's no question about that. Alright guys, if this video saved you money or cleared up the confusion around fair value gaps, please do me a favor, hit the like button so that YouTube knows that this helped, and share this video with a trader that you know that he's being wrecked every single time from using the worst of the worst fair value gaps. And if you want to get instant funding or any of the best evaluation prop firms out there, then I will be leaving the link down in the description for this thing as well. Stop making these mistakes, trade smarter, and I will see you in our next video.